Hello, and welcome to Explain the Charts, your go-to channel for in-depth technical and fundamental analysis. Today is November 25th, 2025, and we are taking a close look at Intel Corporation, ticker symbol Intel. There is a tremendous amount of news surrounding Intel right now, creating a very interesting and mixed picture for investors. On one hand, the company is riding a wave of positive momentum from a strong tech sector rally and a renewed market focus on artificial intelligence. Intel posted very strong Q3 2025 earnings, with revenue hitting $13.7 billion, beating estimates and showing a year-over-year increase. The company also reported improved gross margins and generated $2.5 billion in cash from operations, signaling strengthening financials. Adding to the bullish sentiment, Intel received a substantial $5.7 billion in U.S. government funding, which will help fuel its domestic manufacturing ambitions. Strategically, Intel is making significant moves, unveiling its new Panther Lake and Xeon 6 Plus architectures built on its cutting-edge 18A technology. These advancements are critical for Intel to compete in the high-performance computing and AI space, and the market has taken notice. We've even seen significant options activity with new call positions being opened, suggesting some traders are betting on a continued rise in the stock price. However, it's not all smooth sailing for the chip giant. Intel faces fierce competition, particularly from rival AMD, which has reportedly been dominating weekly CPU sales. Furthermore, while Intel's foundry services is a cornerstone of its long-term strategy, the segment continues to post significant operating losses, totaling over $11 billion in the first 9 months of 2025. This has led to a more cautious approach to capital expenditure, with the company halting some manufacturing projects in Europe and slowing construction in Ohio. There are also broader market concerns about a potential AI bubble, which has caused some choppiness across the entire semiconductor sector recently. So we have a classic battleground scenario: strong earnings and a promising AI future versus intense competition and internal challenges. Now let's see how this narrative is reflected in the charts, starting with the big picture on the daily time frame. Looking at the full daily chart, we can see a story of dramatic recovery. The stock established a critical long-term support level and its 52-week low back in April 2025, right around $17.66. From that point, Intel has been in a powerful uptrend, recently surging 83% over the past 3 months alone. There was a major price gap down in late July 2025, but the stock found its footing in the $18 to $20 range through August and September before beginning its explosive move upwards. The primary catalyst for this recent surge was the Q3 earnings report on October 23rd. Let's zoom in on the price action from the beginning of October to get a better look at this breakout. As you can see, the stock was consolidating in the low $20s before the earnings announcement. On October 24th, following the strong report, the stock gapped up massively, opening at $40.02 after closing the previous day around $38. This powerful move continued, pushing the stock to its 52-week high of $42.48 on October 28th. This level at $42.48 now stands as the most significant resistance level for the bulls to overcome. Since hitting that high, the price has entered a healthy pullback and consolidation phase, which is normal after such a parabolic run. The stock has now pulled back to its current price of $35.79. During this pullback, it found immediate support near the $33 to $34 area, which has been tested multiple times in the last week. This area is now the key short-term support zone to watch. Now let's switch to the 1-hour chart to analyze the most recent price action in more detail. Here we can see the sharp sell-off that occurred on November 20th, where the price dropped from a high of nearly $37 all the way down to a low of $33.48. That was a significant and volatile move that tested the resolve of the bulls. However, buyers stepped in aggressively around that $33.50 level. We can see a strong bounce starting on November 21st, which gained momentum yesterday on November 24th. This rebound action confirms that the $33 to $34 zone is acting as a strong demand area for now. On this shorter time frame, the immediate resistance to watch is that November 20th high, right around $36.70. A convincing break above that level would suggest the corrective pullback is over and the bulls are regaining control. Conversely, a failure to break that resistance and a subsequent fall below the recent low of $32.89 would be a bearish signal, indicating a potentially deeper correction could be underway. For an even closer look, let's briefly examine the 15-minute chart for yesterday's session on November 24th. The price action here was clearly bullish for the day. The stock opened around $34.97 and established a steady uptrend throughout the session, with a series of higher highs and higher lows. It spent the latter half of the day consolidating its gains above the $35.70 mark, closing strong near the day's high. This intraday strength reinforces the bullish case in the very short term, showing buyers were in control heading into today's session. All right, let's switch back to the daily chart to recap and put everything together. Here are the most important price levels to keep on your radar. The key overhead resistance is the 52-week high at $42.48. Minor resistance levels stand at the recent swing high of $36.70, and then the psychological area around $38. On the downside, we have immediate support in the $33 to $34 range, with the recent low being $32.89. Below that, the next major support level is the old breakout point around $30. So, what's the outlook? The bullish scenario, which I believe has about a 60% probability, is that this pullback is a consolidation before the next leg up. This is supported by the strong underlying news and the powerful long-term uptrend. If Intel can hold above $34 and break through the $36.70 resistance, a retest of the $42.48 all-time high becomes very likely. This bullish case will be strengthened by any positive commentary from the upcoming investor conferences at the end of November. The bearish scenario, with a 40% probability, is that the stock is overextended and the headwinds from competition and foundry losses will lead to a deeper correction. A break below the recent low of $32.89 would be the first major warning sign for the bulls. A loss of the $30 support level would be a much more serious development and could signal a reversal of the intermediate-term uptrend. Keep an eye on news from the Barclays and Credit Suisse technology conferences, where Intel executives are scheduled to speak. Any updates on their 18A process, foundry customers, or future guidance could be a major market-moving catalyst. And of course, always monitor the broader Nasdaq and semiconductor indices, as their direction will heavily influence INTC's price action. That wraps up our analysis of Intel. To be clear, this is not financial advice. All information presented in this video is for educational and informational purposes only. You should always conduct your own thorough research and consult with a certified financial professional before making any investment decisions. Thank you for watching Explain the Charts, and we'll see you in the next one.